Good morning, everybody. Thank you so much for gathering here in quite a far out point in London during a full tube strike. So kudos to everybody in the room who made it. I'm sure it wasn't necessarily that easy. And thank you today to my panelists who are joining me. It's always a privilege and a pleasure to be on stage speaking with fellow thought leaders in the space. Of course, we're all part of different exchanges, and I'm sure everybody would like us to address the elephants in the room, but I think today is going to be very high level, exploring the markets, understanding what all of us up here have got in store for the future. So on that note, I will hand over to Helen at the end to introduce herself, and we'll work our way down. Just like to introduce yourself.
Okay, my name is Helen. I'm an executive VP of Binance. I've been in the Binance for quite a long time and managed several functions, including global fiat, charity, and also NFT in the past.
Great. Hi, everyone. I'm Michael. I'm Senior Vice President and Global Head of Sales for Bullish. I've been in the space for 2.5 years, there at the very beginning of a 20-25 person team. And we're a centralized regulated exchange with AMMs built into the core of it to differentiate how we provide liquidity.
Hi everyone, I'm Gracy Chen from Bitget. So Bitget was established in 2018. Right now we serve more than 8 million users from more than 100 countries. So some interesting things happened recently. Number one is we signed a partnership with Lionel Messi. So the very famous footballers, he's our newest ambassador. And maybe number two, like recent events happening among exchanges. So we are also one of the exchanges following CZ's lead to announce that we will also publish our proof of reserve, Merkle Tree proof of reserve, to show more transparency and confidence in the industry.
Thank you. And for those of you who are not fully familiar with Gemini, we are the crypto exchange and custodian, which was founded by the Winklevoss twins back in 2014 in New York. And we're also regulated here in London. We are also live in Singapore and most recently licensed by the Central Bank of Ireland, where we'll be passporting into multiple European countries. So I think on that note, with the note of regulation, I'd like to talk about this just to kick off. In terms of how everybody's approached the market here on this panel, there have been multiple strategies, and it's not my job to say who is wrong and who is right. Some people have forged a path forward with regulation not necessarily being at the forefront, and some of us, such as Gemini, we've always gone with the theory that it's better to ask for permission rather than for forgiveness. So I'd just like to ask my panelists here, how do you view regulation, especially in the light of recent events? And do you think this will have any effect in regulation going forward? Will it perhaps expedite regulations coming in to create more of a harmonized global framework? Michael, would you like to kick us off?
Yeah, sure. So, from our perspective, we're relatively newer on stage in terms of an exchange. We were launched in November 2021 with, one of the main thematics being that we expected this space to be more regulated over time. And so we decided that we would launch day one already regulated. And, I think it's one of those things where, as you look at the way that, other markets have formed, I think you kind of see some similar patterns in terms of way that intermediaries start to form from a first principle basis, but also, as you look at kind of how risk is managed and how you think about broader participation happens, I think there are a number of regulations that come into play on first principle basis, and I think it applied in capital markets as well as in the burgeoning and nascent market that we're a part of as well. So I think, in the sense of providing consumer protection and providing, I guess, kind of market integrity and a fair playing field, I think it's very important. And I think that's kind of where, to a certain degree, as we're maturing, I think it actually helps to kind of accelerate the adoption from a much broader perspective.
Absolutely agree, Michael. And I think it's really important to everybody to keep in mind, especially in days like today. It's been a very, very dark time in the crypto space. And it's not good for anybody when there are these episodic problems in the market. But people lose track of the fact that there are end users, there are people who could be irreversibly hurt by these kind of things. We all get caught up in the names of the CEOs and the companies and the billions at risk. But I think regulation is, as you say, Michael, you're touching upon consumer protection, and that's just so very important as we go forward. Gracie, would you like to add anything to that?
Sure. I think when we talk about regulation, we also need to understand what are the regulation going towards for. So let me give an example using Singapore as a country. Singapore is probably very regulative in terms of exchanges and big players in the industry because they need to protect the end users, which are the consumers, individuals. However, they are more innovative on the Web3 space in terms of those projects who need like innovative space and creative, supportive regulations. So I think that's probably a good form of regulations in terms of what a government official is looking into while they are thinking about regulations. As an exchange, definitely, we also think it's very important to have regulation in our industry, and we are also actively talking to various regulators around the world.
Helen, anything to add?
Sure. I think there are 3 layers. I think first of all, from the exchange perspective, still today, technology looking for applications. So as an industry player, we definitely should embrace regulation, because the better the regulation is going to help the whole industry to increase the penetration rate, which is very healthy actually to the industry. And then with actually even more harsher regulation, we are going to push the unregulated players out of the market. It's also going to be long-term healthy for the whole industry to grow, because ultimately all of us being here because we do believe this actually technology is here to stay. That's why we want to increase the industry penetration. That is very important. That's the first layer. And second layer, I think regulation, there is actually need to be a two-way flow. It's not just one way. It's not just about embracing regulation. There actually, regulation should also embrace technology. I think one of the fundamental is talent flow. There need to be more talented people into the industry. That's why actually for Binance, we're very actively in the past 1 year attracting talents from traditional regulated industry and also regulators, ex-regulators coming to our platform to help us to build a more regulated business. So I think the talent flow is also very fundamental to, in a way, to embrace the regulation. I think last, which is also very fundamental, the industry need to add values to our society, because otherwise, if there's no values, it doesn't matter what kind of regulation is. So I think with all the industry players, what we should focus in, if we talk about currently it's a bear market, I think it's the best time to really building up some solid applications, building more values. That's actually is for the industry to long-term sustain.
Thank you. You touched upon, obviously, bear markets. No one can really deny that we've been going through a crypto winter. At Gemini, we've really used this time to build. And I'd be really interested to hear how you've all used this season as well. And I like that word season because we all know that seasons change. An example of another upside, I think, of what's been happening within our exchange from an exchange perspective and from a custodial perspective is that other regulated institutions or those who are newcomers, perhaps startups, fintechs to the market, they are coming to us a lot earlier, maybe 6, 12, 18 months ahead of launch, because they actually want to work with us in process of their application to the regulators as they get their own approvals. And they're using this time to actually build out their partnerships, their structure, and to actually show not only to the regulators, but perhaps to their investors, their stakeholders, which gives people a lot of comfort that people are choosing the right partners from day one, rather than launching and go, oh, who should we use for this? Who should we use for that? It's a much, much longer term play, which gives personally for myself a lot of confidence, especially on the institutional side. So would you like to talk about what you've done and seen over the last 6 months or so?
Sure. I think during the bear market, we actually call it the golden window, especially to build and grow. For example, earlier this year, about within the past 6 months, what we did a lot is that very contradicting to what the industry generally is doing. For example, in this June, when a lot of big players announced a lot of hiring freeze and job cuts, we were actually one of the few exchanges saying that we want to recruit more people. At that time, we only have 500 people working for the company. And right now we have 800. We want to target at 1,000 at end of this year. So that's why I said it's a golden window to build. A lot of talents are flushing from other exchanges or from Web 2 industries, technology industries as well. And we also saw some talents from finance industry. So in terms of this bear market, what we did a lot is to attract talents, build on our products, and also, like I mentioned previously, we have a lot of branding, exciting events going on. We also want to establish a better standards in terms of transparency for the industry as well. So these are all the things we've been doing for the past 6 months.
Michael, you're relatively new as a player in the space, so I don't know whether it was full-on winter by the time you launched or autumn, but tell us about that.
That's a good way to put it. I mean, for us, I think we've been in build mode since we launched a year ago. And so to a certain degree, it's been kind of one continuous journey, kind of through the seasons. I think, just in addition to what's already been mentioned, because I think we all share a fairly similar sentiment around building, I think it's also a time when leadership really matters a lot as well, particularly when you're operating a business or in our case, an exchange. That leadership comes in the form of having real discipline, right? Having real kind of also a way of being to pull people together. Because the larger sentiment, it is not as, I guess it's just more challenging. And so I think in that situation, it's like, pulling people together to build and just reminding people that, if you build now, you can reap a lot of these benefits later. And I think finding ourselves to be positioning to be operating in strength as the season kind of moves on to the next one is also quite key. So I think it's both that sense of building from a technology and product perspective, but also the human capital as well, right? And building on top of the organization.
Absolutely. And Helen, how have you seen this season?
Sure. I think first, it's very important, particularly during this kind of time, to understand what's people's appetite for the industry. Because if even we talk about returns and bear and bull market, if you look at the BTC's price compared with 3 months ago, yes, there's a big drop. But if you compare even with 4 years ago, I think in November 2018, BTC price is 5,000. And 2019, November is 7,000. Today, yes, we are actually had a big drop, still 14,000. If you look at like a 4 years return, this actually industry generating a very good, decent return. If your time horizon is measured by years, not in terms of days and months. So I think the first fundamental when we talk about the market, we need to understand when people coming into this market, what's their time horizon? And then do they really understand the fundamentals of this industry is very important. Because I think during the bull market, probably what happened last year, there's a lot of FOMO in the industry. You see your friend having maybe 10x return in 3 months' time, you just rush in. But that's not investment. Every investment, you need to understand your time horizon. You need to understand there's associated risk. So I think this is a time to really reflect what is your original intention into the industry, from the investor's perspective. This is quite important. And then as an industry player, it's also very important what you are building. As I said, we're still technology looking for application. But what's the fundamentals? I think going back, what's the whole purpose of what blockchain going to achieve? Look at what happened, in the history. I'm a fundamental believer in blockchain technology. Why is that? I think post-Second World War, there's about 200 developing economies around the globe. During the Second Industrial Revolution, the big jump actually happened in Asia because they were able to take the advantage of the Second Industrial Revolution and created millions of jobs. That is their economic transformation. And then you look at what happened in the Third Industrial Revolution, happened in the past 30 years. Countries, in Europe, in US, we have been benefiting from the technological advancement. But globally, 1% of population is holding 90% of the global wealth. That was not the real intention of actually the Third Industrial Revolution. what actually achieved with internet is the free transfer of information compared with 30 years ago. Get rid of a lot of intermediary. Today, compared with 30 years ago, we were able to read news thousands miles away. So now if we are actually the real fundamental builders of the fourth industrial revolution, blockchain, what we are trying to achieve in the next 30, 20 years, this is a very important thing we need to reflect. And the ultimate goal of that should be free transfer of values. And that is actually very fundamental to thinking about whatever we are building that today, is it really trying to achieve that purpose? Some of the things, as I said, I'm very bullish about the fundamental infrastructures. For example, I just gave an example on charity. Today, in the traditional charity system, let's say we're in London, if we want to donate £100 to a poor girl, let's say in Nigeria, can have a wild guess how much of your £100 will end in the hand of that girl in the traditional system? 25%. You know, we're not even talking about corruption, because sometimes in order to donate £100,000, organizations have to pay £200,000 for the intermediate players. This is why the whole system is not effective and efficient. Same thing with remittances, there's money transfers. But today, blockchain can offer actually a very great solution to make it far more effective and efficient. 4 years ago, what Binance did, we did actually a transparent donation system. We were able to achieve 93% of your donation turned out to be the food of the on children's plate in Africa. The other 7% are the local administration fees. We are actually the only platform charging zero administration. It's not about how good we are, because the technology able for us to do that, because blockchain is transparent, trackable. You don't even need auditors. Every transaction, point to point, can achieve. Same thing actually with ICO, and also the same concept, I think, applied to NFT. So I think it's really about, in this time, to going back to the fundamentals, to building things actually really adding values to people in the society. And one of the things we did in the past few months is when actually Ukraine and Russia war started, we also use our technology, building some refugee card. Everybody can donate to those refugees. You can donate even £1, €1. All the actually donation go into the wallet. So that is very important. So I think the fundamental, if we truly believe as an industry we are trying to achieve the free transfer of values, we need to really focus on some of the building, fundamental infrastructure building during this time.
Thanks, Helen. Very, very powerful points. And just to round that off, I think there's a lot of data out there to suggest, just from the human psychology perspective, if people were to know where every penny of a donation goes, who makes that decision and who receives it, I think people will be willing to give a lot more. I think people hold back, of course, when they think that there's going to be money just going, you know, like you say, 25% ends up in that end person's pocket. Where does the other 75% go? If we can bring that back, bring transparency to the industry, it will be very, very powerful indeed. So talking of use cases, Michael, let's just talk about your exchange and the products that you're building. From where you started to where you are now, which is a relatively short space of time, but crypto years, as we know, are like dog years, how much have your products evolved? And is that due to your own internal analysis? Is that because of customer demand? Where are you seeing things going in the next 3 to 6 months from here?
Yeah, so from our perspective, I think, you know, as most people who launch businesses do, right? When you build something kind of without bringing it to market, you make a certain number of assumptions, and when you bring it to market, you realize that those assumptions have either changed or that maybe you actually didn't get the right ones to start with. And I think what we found is that as you bring something to market, and if you are able to incorporate a very quick and integrated feedback loop between your customers and your products, you can then evolve and quickly find that product market fit. And I think that's what we've discovered, for example, with the use of automated market makers, is that, you know, when we first started building this, you know, it was not as popular. This was like 2020 when we started this whole thing. It wasn't until DeFi summer that, you know, people really understood what AMMs were, and we actually we realized we didn't have to put out educational materials as to what an AMM was anymore, right? So I think what's interesting is, as we brought it to institutional setting, which is kind of where we largely target, we quickly found that there were certain things that people needed to get done, certain jobs to be done. And so what we've discovered is that if we listen closely to our clients, then, you know, we make sure that we are addressing the core things that they are looking to achieve as opposed to just simply the things that would be nice. And so from our perspective, I think the most recent update that I can give to you is when we launched, our exchange with AMMs at the very beginning, November 2021, we had a single set of parameters that the AMM had. Fast forward a couple of weeks ago, we made a big announcement about a release we called Longhorn, just to kind of play with the whole bull theme. And the idea was to be able to provide customers the ability to set their own instructions, what we call an AMM instruction that has its own parameters around the boundaries of which the AMM will work, of the spread that you want it to have. And I think the idea is to provide more flexibility, and that to us, I think, is a combination of listening to our customers, listening to the market, and understanding what kind of jobs people are looking to get done. Because if you think about the typical, let's say, path to achieving an expected return in the crypto native sense, it's largely been staking, lending, and then what are the other options? And the idea was to try to bring towards, I guess, to the table this idea of AMMs as another option or another tool in your toolkit. Different risk profile. If it can achieve a certain kind of expected return, it allows you to diversify your risk. And if it is able to take on scale, then again, it allows for a better way to achieve the job that you're looking to get done. So that's how we've been approaching it.
Sure. And Gracie, yourself as well, you probably had to be very agile in terms of the products that you've been building and how your platform has adapted. What has been the biggest challenge for you in terms of coming to market and making sure that you are giving your target audience what they want?
Since we are serving customers and mainly retail customers from more than 100 countries, you mentioned about when we started and what we feel right now. So we started in Asia, in Asia market, but right now serving a lot of people around the world. So one challenge we find is about localization. Localization not only in terms of language or translation, but also in terms of user behavior could be very different from country to country. Even within a region such as Latin America, each country, the user's behavior and preference are very different. So one thing we've been doing is also recruiting a lot of people from that region who knows product well and do a lot of market research in each region so that our product targeting each region could fully serve or better serve the customer's need. So I think that's one challenge. And indeed, we are, like I said, we are recruiting a lot of people. So anyone in this room, if you're looking for a job or interested in working for exchange, do approach us. We have another 200 openings, some of them in localization and product management, basically around the world. So location-wise, we're very flexible. And then you also asked us about what's probably going to have happen after 3-6 months. In my own perspective, I think there are mainly 3 things that will happen in the future, also due to the recent incidents that happened among other exchanges. So one major thing is there will be more consolidation among exchanges. So it will enter what we call a consolidation phase. Many smaller exchanges will die and fade away, and the bigger exchanges, there will only probably be maybe 10 bigger exchanges at the end of the whole cycle, but basically it will be more consolidation among exchanges. I think that's one thing that will happen, probably not in 3 to 6 months, but that is a trend that we are seeing. Another trend is there will be less M&A sort of investment. So for example, as we know, like recently, it's not only the exchange business of the competitor, the big elephant in the room is actually fine. It's very more on their debt leverage of their investment arm. So those kind of blind buying will be less in the future, we think. And then the third trend is probably towards regulation. So the regulators will step in more. We've already seen them stepping in more recently. And we do think this is a healthy situation, but we also hope that regulators can consider the fact that this whole industry, blockchain cryptocurrency, is still a very emergent market. So there are a lot of areas to improve, but it will need some rooms for growth, for innovation as well. So these are the 3 trends that I want to share.
Thank you. We have a few minutes left before we go to Q&A. I'd just like to sort of hear from everybody. In terms of your client base and custody, how important do you think custody is? I mean, we all know custody is very important, but in terms of your clients, where do they put that in the priority list? Is it sort of at the forefront, in the middle, or is it the afterthought? Within Gemini, depending on the type of client we have, sometimes that's the absolute priority, and maybe they're willing to compromise on certain other things, but it's about, unless there is cold storage, segregated custody, they don't want to be involved. Obviously, depending on the type of client, if you're a high-frequency trading fund, it's not about cold storage, perhaps it's more about MPC technology. But where do you think the trends are going from your client perspective? Helen, do you want to start?
Sure. I think before answering that question, there need to be 2 fundamentals. I think it's not how we think about it. It's actually how the institution thinks crypto is quite important. Do they believe crypto is a store of value? Or maybe they use crypto as a store of fear to diversify their portfolio? And then that's very important. So I think when today, crypto industry is, in a way, there's so many links with the financial industry. And then the fundamental understanding from the traditional institution investor, their attitude towards crypto is actually really matter. And I think the underlying of that, actually, the most important thing before we even talk about our priority, I think education actually the most fundamental. Because today, I think the whole industry, we're still trying, a lot of people still trying to mixing things. For example, people seeing the big job price of certain NFT, they say, hey, NFT, there's no future. There's a fundamental problem because they're trying to mix the NFT mechanism with a few NFT, pricing job, talk about it. So this is talking about, 100 years ago, you are talking about London Stock Exchange. It's a few of the stocks, are going down. I mean, 100 years ago, now all the stock lasts until today. But are we trying to say London Stock Exchange, the mechanism doesn't work? That's wrong. The mechanism actually has a lot of values. I think so. That's one of just the example. I think in this industry, there still need so much education to regulators, to institution investors, and also even to players. And most importantly, I think actually is to younger generations. So one of the things actually I think is even more important for the industry, we actually also Binance is also actively doing more education to the younger generation. Because we believe actually if they can adopt more understanding the fundamental about the technology, creating more applications, that's really the future. So that's probably my perspective. It's not about how we think. We should probably, from Michael's perspective, understanding how actually the global shift of the financial system. But one of the fundamental, as I said, I'm a strong believer in blockchain, because I think in a way, jump a bigger picture, I think human has been searching for good governance since Aristotle time. Even we look at today, we're talking about financial recessions. I personally would probably think we need to even look at what's going on. Probably there's a geopolitical recession. Why this is happening in our generation? Because financial recession is very easy to quantify. It's in a few years. But geopolitical recession actually normally lasts for generations. That's what happened in the history. And then if you look at why this is happening, as I said, it's about governance. Since Aristotle time, we have been searching a good model of governance. But whether it's a communist, whether it's a capitalism, whether it's a socialism, actually they all started in a very good intention. What really went wrong is human nature. When a group of humans, after a while, they're getting power, things went wrong. That just happened in the history. I think now, with fourth industrial revolution, we get into a year, blockchain technology going to play a very important complementary role, actually, to the existing way of governance. That is actually what's going to happen in the future. So whether talking about what actually blockchain and crypto going to really innovate for institutional investor, I think the current financial system has been lost in the existing model for the 20, 30 years. It needs certain technology to come in to play a role to making the system far more efficient and effective. That is the fundamental. And then in order, if company want to attract institutions' money, we need to build, how in a way we can improve the efficiency and effectiveness in terms for the customers, and that is more fundamental.
Thanks, Helen. Great segue into Q&A. Someone has a microphone there, so we have a lady in second row, just here.
Hi there. Thanks for that great session. Helen, I think you rightly said that education needs to happen, and we also need to work with regulators. My question is, what are the biggest exchanges doing in terms of bringing because there's a sunrise problem we're seeing in terms of regulations, and regulate in one country is ready, but the regulator in another country is probably not ready. So why do you think it's not happening soon enough? Like, we see climate conferences and regulators from all over the world coming together on topics like climate change, but we don't see as much on, on our compliance problems with blockchain and crypto. So my question is when is that going to happen, and what are the exchanges, the people who have power, doing about it?
Sure, first of all, it's a great question. I think today, even for us, Binance, I think we're still a young company. We just passed the 5 years anniversary, a few months ago. So this is a very young industry. So for example, you cannot require your 5 years old to pass a Harvard test, right? So there's always a different kind of stage. There's different kind of expectations people need to have. But I think the reason we need to look at some of the huge growth of some of the exchanges, the industry is booming. That's why certain company we are lucky, has been typed on the right trend. And I think for us, what have been always focused in building is how to create values for the customer. Whether it's a customer service, whether it's a product, that's something we're good at. Because if you look at even Binance, majority of people actually are engineers. That's something we're good at the most. Now we're learning, because industry coming in, we need to attract a lot of talent, building up more on compliance and regulation. So we're still learning. That's why I said regulation, we should definitely embrace it. Education is very important. And it's all about attracting the right talent into the industry to keep building. That would be my view. And then, and in a way, I think today people think, hey, you are big, but that's not really. We're still a young company, 5 years old. And then there's still a lot of things to learn, to improve, and also, to work with the others.
I'd say that, greater regulatory clarity brings confidence. And I think as, people are starting to realize that this is not, a trend that goes away quickly, that people will start to build those kind of clarity. And I think that's where regulators are starting to move. And I think it's a good thing to have that. And I believe that, we will see more and more of that coming through relatively soon. And some of it's already kind of in play, right? So you've got Mika coming through, over the course of the coming, 2 years. And I think that is like a pretty good sign of, some kind of unified way to provide clarity. And so I think that the more clarity we get, the more confident we're going to get from, both, I think, institutions as well as others to be able to adopt.
Thanks, Michael. I think the fundamental is there is no one-size-fits-all solution. And that's why the big players, they're working in tandem with regulators. And we've always worked very closely with regulators globally to do our best to help shape that path forward. And as Michael said, quite rightly, Mika has come in. That's given a foundation of a European framework. Now, that's not to say it's perfect, but it's something to start with, et cetera. So another question, please. Where is my friend with the microphone?
Hi. I think a conversation about the evolution of crypto exchanges needs to address what's just happened with FTX. And so I was wondering why, in each of your opinions, has FTX failed and collapsed in such a sort of public and spectacular way so quickly this week? And how can end users trust exchanges if they're not transparent about their financials or the structure of their businesses? And how are you going to win back trust?
Someone wants to clap. I think that's good. You clap that. Thanks. It's obviously a great question, and I think we'll all have perspectives. From the Gemini side, you're absolutely right. There's a very big point around transparency, and people have approached this in very different ways. All I would say on Gemini's behalf is that we are a fully funded reserve platform. That means that we have one-to-one what we have in assets on our exchange. So if there ever was a point where our customers need to withdraw, they are going to be able to do that. And that has been our approach, and that's been a very open approach. We were the first custodian to receive the SOC 1 and SOC 2 reports. So we have always approached everything with the level of transparency, and we want our customers to trust us. Now, of course, we need to go out there, and as Helen's saying, it's just about education, and helping consumers, whether they're institutional or whether they're retail, understand the differences between platforms that are being fully transparent, that are being fully open, compliant, that are leading with security first, rather than as an afterthought. Michael, do you have something to add to that?
Sure, yeah. I think if you think about our space, it's a very exciting space. And there's a lot of things that people are attracted to this, and it could be different factors, right? And I think to a certain degree, it's a question of, where have you been drawn the most in terms of the factor that leads you to adopt or use this platform or that platform. And I think, one thing that we've consistently heard of is, there just needs to be transparency. Transparency is key. We, for example, have audited financials. You can look at it on the F4 that we've got with the SEC Edgar website, because we're pursuing a SPAC at the moment. So there's a lot of transparency with which we've been dealing, and we feel like that's certainly becoming more and more of a factor that people are looking at. And I think however other exchanges have dealt with it in the past, I think there is certainly a narrative and a movement towards counterparty risk and credibility, and that being a really, really important way to evaluate whether or not you want to deal with somebody or not.
To us, we think moving users' fund is intolerant, crystal clear. So like Gemini, like Stephanie also mentioned, we also have one-to-one fund reserve, and also, like I said, we will do the proof of reserve hopefully within a month, but we are also talking to many players such as auditors. So we've been talking to Big Four auditors. But one question or one problem that comes up is also those traditional, more credible auditors, they also find it, they can't understand the technology part of our industry. So there is a huge gap in terms of getting the exchanges audited and being able to provide more information to the industry through their credibility, but I think that's one issue we need to address as a whole industry. I would love to see more players who can help us on this, and I mean that's probably a big need among all the exchanges. We will all be their customers, so I think that's one thing.
I would slightly defend the auditors, if I may, just to play devil's advocate. I mean, we've been working with the likes of KPMG, PwC, Big Four companies since inception back in 2014, and they have full-blown crypto specialist desks that they've gone out to the market and they've recruited the talent. It's not someone necessarily who's covering a consumer goods toy shop on one hand and then doing the auditing of a multi-billion-dollar crypto exchange on the other. And I think that a lot of the professional services firms are really gearing up now, whether they're auditors, whether they're law firms, accountants, etc. They are collectively building their own armies to be able to support us as exchanges in this industry.
Mm-hmm. Actually, because yesterday we also talked to one of the firms, and we realized that we started to cook on that. Basically, like you said, they have some talents in some of the departments who know this a little bit. But firstly, you need to keep in mind that it's such a big firm. Even those internal information flow will take some time to lead to the right person or right group of people to talk to us on this. But I think that's being audited is definitely one way to show more transparency to the industry, and then the proof of fund that we mentioned earlier is another way to give more confidence to the industry. And also, like for Bitget, we also published a 200 million AUM kind of protection fund. And that protection fund is within 4 wallets, which is openly viewable. So we published that on our website, which is the wallet address, so that everyone, like every single one in this room, you don't even need a Bitget account. You can, like, whoever can go to that website and check on those accounts because they are open wallets for everyone to view. So I think that's another way to establish confidence. I know Binance have similar funds as well, but only like 3 or 4 exchanges in the world have those kind of establishment ready for everyone to check.
Thanks, Gracie. Unfortunately, we are out of time. I hope that you've enjoyed this panel as much as I have. I hope you'll agree with me. What I've heard today is definitely thought leadership and leadership at its best. And if I can leave everybody with an afterthought from one of our founders, Cameron Winklevoss, he always likes to say that great leadership is not about making all the great decisions yourself. It's empowering, creating a culture to make other leaders be able to make those great decisions as well. So thank you so much, everyone.
Thank you.